Having an Airbnb is usually profitable, rewarding, and genuinely enjoyable. Usually. But it can also be expensive, horrifying, and a miserable experience come tax season. But it doesn't have to be. If you're feeling overwhelmed by tax forms, deductions, and reporting requirements, you're not alone. Relax, breathe. You came to the right place. In this video, we will tell you everything you need to know about filing your Airbnb income, from basic requirements to money-saving deductions. We'll walk you through the whole process in clear, simple steps, helping you protect your business and make the most out of your hosting income. Let's make tax time a breeze. In 2025, major tax reform legislation reinstated the original 1099K threshold. Airbnb will only send you a 1099K if you have over $20,000 in gross payments and 200 or more transactions in a calendar year. However, you are legally obligated to report all Airbnb income, even if no 1099K is issued. There is one major exception to this that we'll cover later. Keeping accurate records and reporting your full income ensures that you can claim all eligible deductions to reduce your taxable income, stay in compliance and avoid IRS audits or penalties, build a credible professional hosting business, and simplifying future financial decisions, such as applying for loans or selling your property. While Airbnb provides some tax info, it's up to you to keep track of your income and expenses and file your taxes properly. And remember, you don't have to pay taxes on your income, you pay taxes on your profit. That is the income minus your expenses. Now that you know what you need to report, let's look at how to do it. Tax forms can seem confusing, but I'll explain which ones you'll get, which ones to fill out, and how to choose the right form to save money. You can also check Airbnb's US Tax Frequently Asked Questions for extra help. At 1099K if you earn more than $20,000 and have 200 or more transactions during the year. At 1099 Miss or 1099 NEC if you receive bonuses, referrals, or promotions over $600. Airbnb sends these forms by January 31st. Keep in mind that some states have their own lower thresholds for reporting. If your Airbnb income is passive, you'll use Schedule E. Schedule E lets you report rental income and deduct expenses like mortgage interests, property taxes, utilities, insurance, and maintenance without paying self-employment tax. Use Schedule E form if you're mainly renting out your place without any extra services. That means that you only provide basic amenities and furnishings. Cleaning only happens in between guests, and you have little or no interaction with them. You can also deduct up to $25,000 in losses if your adjusted gross income is under $100,000. Schedule C, on the other hand, should be used if your Airbnb income is active. This means that you might owe self-employment tax, but you can also claim more deductions like supplies, wages, marketing, and part of your home. You should use this form if you have a more hands-on approach, like providing regular cleaning, housekeeping, meals, concierge services, or tours. This way you can have extensive business deductions, including supplies, employee wages, marketing costs, and a portion of your home expenses if you use part of it regularly and exclusively for business. Keep in mind that you should also report all Airbnb income, even if no 1099 is received. Submit a W-9 to Airbnb to avoid 24% withholding. Save receipts and track expenses all year. And consider quarterly tax payments if you expect to owe over $1,000. Have an LLC for your Airbnb? Things look slightly different. Here's what you need to know about filing your taxes. If you're a single-member LLC, that means it's only you who owns it, the process is relatively straightforward. Your LLC is treated as a disregarded entity for tax purposes. You can report your income on your personal tax return. You can use the same Schedule E or Schedule C forms. Include your LLC info on your personal tax forms. Remember, your LLC protects your personal assets but doesn't change how you report your income. Now, if your LLC is a multi-member, that means it has multiple owners, you require a few additional steps. The LLC files Form 1065, Partnership Return. Each owner gets a Schedule K1 showing their share. Owners report this under Schedule E or Schedule C, and the partnership return must be done before individual filings. If you don't have an LLC for your short-term rental business and are considering it, here are some of the benefits. Asset protection. An LLC keeps your personal assets safe. Business deductions. You can claim expenses like repairs, utilities, and marketing. Tax flexibility. LLCs can elect S corporation taxation for tax savings. Professional image. It looks more credible to guests and vendors. If you choose to do this, then remember to keep lean records. Use separate bank accounts for your rental business, track all expenses carefully, and understand your state's LLC requirements. While this might sound like extra work, good organization makes tax time much easier. If you want to get the most tax benefits, consider working with a tax professional who understands short-term rentals. Although some of this might seem too complicated, the good news is that you can lower your taxes by claiming legitimate deductions. Here are some common deductions. Mortgage interest. Deduct the interest on your loan for the rental part of your property. Maintenance and repairs. Expenses for fixing and maintaining your property are deductible. Utilities and internet. Water, electricity, heating, and internet costs during rentals can be claimed. Cleaning. Cleaning fees between guests are deductible. Guests' fees. Service fees from Airbnb can reduce your taxable income. Supplies and amenities. Toiletries, linens, and kitchen items you provide are deductible. Depreciation is another great tax benefit. You can write off the wear and tear on your property over several years, and as of 2025, you can write off the full cost of eligible property upgrades like furniture, appliances, and renovations. There are other two important tax rules for Airbnb hosts that you should know. The 14-day rule. Remember that exception I mentioned earlier? If you rent out your property for 14 days or less in a year and use it personally for more than 14 days, you don't have to report the rental income. This is called the 14-day rule. But if you rent it for more than 14 days or use it personally for less than 14 days, all your rental income must be reported. Short-Term Rental Tax Loophole. If you rent for less than 7 days on average, provide substantial services, and meet material participation rules like 500 or more hours a year, you may qualify to deduct rental losses against your other income. This might mean filing Schedule C instead of Schedule E, which can save you on taxes. Hopefully this guide helped you understand how to properly file your Airbnb income and eased some of your anxiety. Remember, the goal isn't to minimize taxes at any cost. It's to claim every available deduction while maintaining a clear paper trail. Focus on accuracy and completeness rather than aggressive deductions. If you found this video helpful, give it a thumbs up and subscribe for more short-term rental tips and insights. Do you have any questions? Would you like to share your own tax tips and tricks? Then drop a comment below. We love hearing from you. Thank you so much for watching and happy hosting. See you next time.